Okay, well, Dean Kim, head of Global Research Product at William O'Neill and Company, is joining us. Dean, good to have you with us here. Thanks very much for your time. Uh, it's bad because it's good. That seems to be the issue, especially in the U.S. Yields are up and dollar is up, and equities are sulking a little bit. Does it change anything dramatically, Dean? Should we be prepared for, in a way, reflation once again from looking out for recession around the corner, almost a reflationary kind of a situation?
Yeah, we're kind of in a tricky situation at the moment, but I look at a couple of things. One is, we have to remember that NASDAQ is up 30% year to date, and S&P is up 16%. So in my mind, it's completely natural for some profit taking, especially on the back of bond yields rising. So you have the 10-year almost at the all-time high, or fairly high up there, and then the 2-year continues to stay up. And what I think what the market is thinking now is that while inflation is starting to come down a bit, it's very stubborn. And when you look at components like labor, rents are coming down, new rents are coming down, but overall still buoyant. And now energy prices are putting upward pressure on inflation. And couple that with retail sales coming in better than expected. So there's a lot of spending power still out there. I think that's what's making Fed think about continuing its hawkish stance versus backing off. So I think the market is kind of translating all of that and deciding to take some profit at the moment. Now, both S&P and NASDAQ did reach their 50-day moving averages today. And so according to our methodology, we have shifted the market status to downtrend. So I think for investors in the U.S., we should take note of that and be cautious. And if we certainly break the next level support, which is August high of last year for both S&P and NASDAQ, then I think the worry meter will go up. So we're kind of in the camp of waiting out this sort of bearish August and perhaps looking towards second half for better performance.
Dean, hi, good morning, and thanks for joining us on the channel. I wanted your thoughts on how one should approach the Nifty now, considering that so far it's been a one-way rally, but now there are some hurdles around the 50 DMA. Your thoughts of whether this 19,500 level can be scaled convincingly, and over the next few months, what could be the markers?
Yeah, so it's good to see, I look at the Sensex, and it's good to see the Sensex sort of bouncing off the 50-day moving average in the last trading session. So I think that's a healthy sign. However, given some of the macro headwinds felt in the U.S. as well as particularly China, we may see some selling pressure. So if the Sensex breaches the 50-day moving average, I would take stock and start to trim positions in those stocks that are heavily extended. And so I think it's now time to be more cautious and really pay attention to the technicals on your stock holdings.
And before we let you go, any quick stocks that you have in mind? I mean, you track the Sensex components as well very closely. Anything where you still see an uptrend given the volatility in the market?
Well, I think, few stocks comes to mind. We tend to look for stocks that are breaking out from early stage bases. And so like Varun Beverages in the consumer cyclical space, Astral, as well as Endurance Technologies, those types of stocks are acting well. And then I think pharma, Cipla, as well as, in other areas like Sera, sanitary ware, MedPlus is another related healthcare name. So I think those are all looking fairly good in terms of early stage breakouts. Other names like Dixon Technologies, I think India is doing a great job in terms of manufacturing their own components. So that could be the next theme for growth for the country. And so I would pay attention to these types of names.
All right. Thanks a lot, Dean, for joining in. Appreciate your thoughts here on CNBC TV18. We'll slip into a quick break on the other side. Lots of stocks to talk about, plenty of newsmakers, so do stay tuned in for that. Coming up in a bit.